Hey everyone, and welcome to Earnings Cheat Sheet for Friday, November 15th. It's Alexis Garcia and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. Now, Ed, I'm not really one for musicals, but I think the name on everybody's lips is going to be Nvidia this week. What else do you got for us?
Yeah, Nvidia is definitely, that could be, you could say that three times. Reviewing that three times may make the most sense, but Nvidia,
Would Jensen
well,
Wong just magically appear in the
that's
room?
right.
Yeah.
But look at Nvidia, Walmart, and Palo Alto Networks.
All right, well, let's get into it and start with Nvidia, which is scheduled to report Q3 earnings on Wednesday, November 20th. Earnings are expected to rise 85% to 74 cents per share. Revenue is also seen climbing 82% to $32.954 billion. This would snap a five-quarter string of triple-digit growth for both of those figures. And here's why we're watching Nvidia. I mean, Nvidia is the market leader. The focus will be on the ramp up of Blackwell after that technical setback caused delay. Analysts are also more interested in guidance because that will include these Blackwell chips. Now, Ed, it seems like analysts are growing increasingly confident about Nvidia's prospects. There were at least five research firms that raised their price targets this week. But it seems like the one lingering concern is we know we have all this quote unquote insane demand, but can the supply keep up with it?
Yeah, that's going to be a big issue is because, yeah, Blackwell, can that ramp up? Because there were concerns. Supposedly production, I mean, that shipment should start in Q4, but how seriously and when will it really pick up? Yeah, and it's going to beat like I mean, it's like the growth is going to be strong. We know that. The question is it going to beat? Is it going to beat the whisper numbers? That would be the kind of situation where it could fall on earnings, even if you look at the numbers and you go, "Oh, those are great," but that happens all the time. The expectations are very high for this company, so it's certainly possible that things would not go well. But yes, Blackwell, it's a step up. I think that's really what it's about. Going, really shifting that. We're going to start seeing guidance based off of that. So if they say no, we're going to get $3 billion in Q4 and 30 billion in Q1. I mean, I don't know what those numbers will be, but that's the kind of things that they're going to want to be looking at, seeing that Blackwell's on track, seeing that Blackwell really is going to be contributing, coming forward.
All right, Ed, well, let's take a dive into the chart then, because we had NVIDIA break out of a 140.76 buy point back in October, and it kind of lingered around there, pulled back to the 21-day line, but found some buying support, and now is still just kind of hovering at the top end of that buy zone. So, how are you looking at this chart if you are in this stock? How do you hold and stay in it? And if you're looking to maybe add or enter, what are you hoping will set up?
I mean, if you're a longer term holder, it's easy to hold. Like you get, because there would have been plenty of chances you could have sold. Probably wouldn't have been this would be the moment to sell per se. But if you bought around the recent buy point at 140.76, or especially at the high handle of say 144.42, you don't have much cushion. So you really have to be thinking about that. And I don't think you can be, buying right ahead of here because there's just such risk here unless you're doing an option play. There's always that as a possibility. It could be actionable after earnings, but there's a good chance this is going to be moving a lot up or down. And so then you have to make a decision. Other things looking at this chart, the relative strength line has moved up to basically the high. So that's crept up. It's improved, getting back up to those levels. The volume has been drying up during this rally. Now, at times when it's pulled back, that's fine, but really don't see much volume on the way up. And so that's one reason why the accumulation distribution rating is a D plus, which is pretty low. It was an E for a while, so it's actually improved a little bit. But that's probably because some of the stuff on the left-hand side of its consolidation, some of that data is probably falling off the calculation rather than real accumulation picking up. And more importantly, this is just so important for the whole market. Okay, this is so important for all those other AI chip makers. A number of them are not doing as well as NVIDIA. I mean, they're not doing terribly, but they're sort of weakening where NVIDIA is holding strong. The whole market, though, I mean, look, this has been an AI-driven market. Yes, there's been some other areas that have picked up in the last week or so, but it's really AI is so important. So if NVIDIA has bullish things to say, that could keep the party going through the end of the year, at least until the next round of earnings reports from all of Nvidia's customers.
And Ed, I want to jump over to SMH because we've seen a rotation out of chips over the last week or so. And we've seen this flirted with that buy point here, but has really pulled back. So is that any cause for concern as we go ahead of NVIDIA, or how are you possibly looking at this since NVIDIA is such an important component of this sector?
It's such an important component, and some of the other components that have been doing well, the other AI chips, some of them have been waning in this last week. Not terribly, but waning. And a lot of other chip makers are really struggling. I mean, a lot. So if you're not in the AI chip business, and some that are, some of them have really sold off or at least have stagnated. So you can see the relative strength line on SMH is pretty close to recent lows. Really hasn't shown much of improvement at all, whereas NVIDIA is up near highs, and it is the dominant member. That shows you how weak a lot of SMH is outside of NVIDIA. So yeah, this is important. There's times when you can use SMH as a way to play the chip sector, but right now there's certain areas that are strong and a lot that's not. So this would, reduce the risk, but definitely reduce the upside too, because this has definitely been lagging the leaders in chips.
All right, well, let's move on to the next name on our list, which is Palo Alto Networks. They're scheduled to report fiscal Q1 earnings on Wednesday, November 20th. Earnings are expected to rise 7% to 148 per share, and revenue is expected to climb 13% to $2.121 billion. And here's why we're watching Palo Alto. The US Cybersecurity and Infrastructure Agency faces an uncertain future in the President elect Donald Trump second era here, Ed. And, with Palo Alto, we've really just seen it's all about this platformization strategy. This is a new thing they were really pushing this year, trying to get customers to buy multiple products under one umbrella to really increase their total addressable market. But what are your thoughts? Because it seems like it's been a little successful so far. But what are your thoughts with Palo Alto as we head into earnings?
Yeah, it's made some moves here, on there. It's been showing some strength. The cybersecurity area has done relatively well, but it's also at the same time we don't know how Trump is really going to be affecting it. There's just sort of just an open question. It's a new administration. It's not that there's not necessarily an obvious this is going to be good, this is going to be bad kind of situation. But there's that. I mean, we're still looking for growth to really ramp up for Palo Alto. It's harder because growth is sort of large. I mean, revenue growth has been slowing down. Earnings growth has been slowing down now for several quarters. So we want to see that turn around a little bit. But this is still a leader in that. Cybersecurity still a leader. That's just a trend that should be positive for the foreseeable future. So this is going to be important not just for Palo Alto, but for the cybersecurity sector. We get those sort of off and on dribs and drabs, but this is one of the big ones, and definitely want to see how this one does.
All right, well, let's take a look at the chart because this one broke out from a 380.84 buy zone. It pulled back, found support at that 21-day line, has been moving higher and back in that buy zone. So, what are your thoughts about the action here?
I mean, it's in a buy zone, but earnings are coming up. So it's just really tricky. And there's been some up and down. It has sort of had this up and down, two steps forward, one step back over the last several months. Look several months ago, back to early in the year. Where was that a drop? That was an enormous drop, and it's just only recently recovered that. Now, the relative strength line has improved relatively well. It's still not at highs, but it's sort of at the highest levels since since getting at those highs. But that's also just tells you that's the risk. Palo Alto could certainly make, a big move up either on a day or over a few days, but you could also see the opposite. So definitely high risk on that one. There are certain names that, are a little less prone to that, but this one's likely to make a big move either on the day after earnings or the next few days.
All right, Ed. Well, let's move on to the next name. And everything's been so AI focused, but Walmart, the retailer, has been doing really well. They report earnings on Tuesday, November 19th, and the retail giant is expected to see Q3 earnings rise 4% to 53 cents per share. and analysts expect revenue to climb 4% to $167.695 billion. And here's why we're watching Walmart. We'll want to see if there's been any impact from the port strike and if the retailer has started increasing orders to get ahead of any potential tariffs, or if they mention any sort of possible increases in response to that. We'll also be interested in the consumer and overall outlook for 2025. So, Ed, a lot of funds have been loading up on Walmart over the last month. Definitely is seeing that institutional support. So, talk a little bit about the stock and retailers in general heading into earnings and what you're looking for.
Yeah, it's a big week for retailers, especially on the discount front. Walmart's just done solid performance. I mean, look, it's not the 80s. It's not, back when Walmart had this amazing growth, but it's been a real steady performer. And for a while, it would grow, it would rise, but the relative strength line wasn't improving. But you can see over the last couple of years, especially since the end of 2023, that relative strength line really has improved. It's been on a run here. So this isn't one that's, while the chances are it's not going to make a massive move from here, there's definitely room for people having in their portfolio a stock like that. But again, it's the earnings aren't going to be amazing, but can it do well here? What are the state of the consumers? I mean, part of the benefit for Walmart of people trading down because they're worried about things. So that can actually be a good thing for Walmart, but not necessarily a great sign for consumers overall. So it'll be different. It'll be, Walmart may react one way, but it may be a negative sign for consumers and retailers overall. But really important. This is the nation's largest employer. This is an important company, and it continues to do well in a tough business.
Right, Ed. And as you can look here at the chart, I'm on the weekly chart. We had this 3 weeks tight area that it broke out of last week. I guess technically that buy zone would extend to 85, 84. But like you said, it's had a really nice run so far this year, just really flirted with that 10-week line once. But what are your thoughts with the technical action?
Yeah, there really haven't been too many chances. Maybe that big support off the 10-week line when it came off of that was a chance you could have bought. But before then, it's been quite a while. I mean, there's a 3 weeks tight. You could have done an add-on buys, but it wasn't really a place for new positions. This one just needs time at this point. I mean, it's run up a lot, so you have to wonder how much can it go given its growth rate, given that it's extended. It probably needs to rest for a while, but it's been acting very well pretty much all year.
And Ed, it's interesting because I know you and the IBD Live team have been covering this. We had Joe Fahmy on the podcast this week. Just a lot of stocks that have really shot up here over the last couple weeks that are extended, but really waiting for those pullbacks. And I think it really just illustrates, the importance of finding those right entry points so that you can get into a stock and perhaps hold on to it or have some cushion for that earnings rush, I guess.
Yeah, I mean, I know it's not earnings season conversation, but it's always so important to have your watch list ready because you need to take advantage of traditional buy points, early entries, but to get them before they're early. It's you want to get to be quick on the draw because then things can get away. Some of the big winners, especially, you don't want those to get away because once they do, then you don't have a good opportunity. Your risks are much higher buying a stock that's really extended. Yeah, it could keep on running, but we've also seen a lot of stocks this week that were really big winners last week fall back. They may look okay for charts, but you would be sitting on a big loss. So watch lists and knowing when earnings are coming up, it's just things that investors have to be doing.
All right. Well, those were some of the big names on our radar, Ed, but let's take a look at a couple more. Let's go to another retailer that's TJX Companies. I think we've already established you're not really a Maxinista, but I'm going to switch back to the daily here. This one tried to break out on November 13th, but it reversed lower on November 14th below that buy point. But what are your thoughts here?
It's acting pretty well. This one has maybe a little stronger profit growth than Walmart has. The RS line is faded, but that's because it's been basing. I mean, after a decent uptrend, so the RS line isn't the greatest. it broke out. Yeah, it did on November 13th. It had early entries maybe over the prior few days as it cleared some short-term levels or a downward sloping trend line. So that, falling after like, I think an 8-day win streak, the market wasn't up on this day. I think that's probably a positive. I think ideally for those who don't own this stock, that this would just trade right around here and then break out on earnings rather than run up. So that would be ideal. We'll see what happens.
All right, well, let's take a look at another retailer because rival Ross is also reporting next week. And as we can see, this chart not holding up as well as TJX. So, what are your thoughts here with Ross?
I mean, it'll be important to see how this does for Ross and TGX. But yeah, I mean, it could bounce back, but its relative strength line is a lot weaker. It really need to show something that it's changed that. And why would you buy Ross over TJX or some other names in that space?
Yeah, it'd be great to see if it can get back above the 200-day and 50-day here, Ed. Let's take a look at PAL. Now, this name's been coming up a lot. And again, we want to talk about these big runs. It was looking really good toward the end of last week. It's pulled back sharply here over the last few days, flirting with that 21-day line. But if you got back in this breakout here in September, you're sitting on a pretty good profit cushion. So, what are your thoughts with Powell? And how do you stay in? What are you looking at to stay in? And could this 21-day line be a potential level here to watch?
Yeah, I mean, this is an AI adjacent play, sort of serving some data centers in various ways. You're absolutely right. Those who bought around that 190, 98 area or what have you, that's fine. But if you bought at the highs, you're down 20%. I mean, that's what it's like the stock, but the stock is finding support at the 21-day line, which is where it's found support a lot. So it's not doing anything wrong, especially given how volatile this name really moves up and down. It's had big, big gains over time, but there have been times when you could easily be down 20, 30% in just a few days. So you want to buy this one right. Because if you don't buy it right, you could be in a lot of trouble.
All right, let's move on and take a look at Intuit. This is a tax software company. And again, we have this one in a buy zone after a breakout here, November 8th. So talk to me about this chart.
Yeah, I don't know if there's a Trump trade, like maybe there'll be less risk of the Treasury Department giving away free software and getting rid of TurboTax. I mean, that I haven't thought about that, but that's probably a factor out there. It's in a buy zone, but earnings are coming up, and so you'd probably want to wait unless you're using an option play.
All right, let's take a look at China EV maker Xpeng. Ed, and this one, again, we had China stocks, as we know, have been really volatile lately. But this one had a nice run, but has pulled back sharply over the last few days. And again, it's kissing that 21-day line. So, what are your thoughts here?
This is really volatile. There's a lot of things going right for this in terms of new models and stuff. I don't know if we'll really see it in this earnings report. It'll be more, what they have to say. I think people will be looking for the Q4 delivery guidance. It's like, okay, can they ramp it up? Because that's been a problem with some of these EV makers, Xpeng partly in that, where it's like they really just when they get those new models and they're a hit to really ramp it up before that enthusiasm fades. So there's some that would be the thing I think people are looking for. You could buy it when it bounces back above 1373, say on earnings, but again, this is very volatile. You can see really big moves that it makes up and down just over this year, let alone in a longer term.
All right, let's take a look at trip.com. And then again, this one, again, another volatile one, hit that 69.67 high, pulled back to the 21-day line, tried to make that rally, but now it's really pulled back and inching closer to that 50-day line and to this previous buy point here of 61.66.
Yeah, and this one does have earnings on November 18th, despite what the chart is saying right here. That I think that just came out. Yeah, this one's pulling back. So maybe there could be a bounce off the 50-day, 10-week line that you could use. It's volatile. This has been a strong area. There's concerns about China stimulus. I mean, the trade tariffs wouldn't necessarily affect this company per se, but if you think that would hit the Chinese economy, then it would. That's going to be a lot of these names. A lot of these companies don't have anything to do with the US, but if China's economy struggles, it'll have an impact. So uh been some strong moves in this one, but yeah, needs a bounce.
All right, let's take a look at one more, Ed, and that's Atour Lifestyle Holdings. Again, this is another China-based hotel leisure stock, and this one, broke out of this consolidation, but it looks like it's really trying to maybe hold ground here around this 21-day line or that, you know, 2650 level.
Yeah, and if you go on a weekly chart, I think by the time earnings come around, it should have a new base because this looks like the sixth week in the base. So you could use that as a base, or you can treat it as a handle to an enormous consolidation, even bigger consolidation. So they're either way, but this has sort of happened. It's had a big run, and sometimes, well, you can't buy it, but now it's paused. And you can see the 10-week line has been trying to catch up. It actually did catch up a couple of weeks ago. So this could be potentially viable. It's really, you can see big ups and downs. And so while the range ultimately in the chart hasn't been that big, week to week, it seems to hit that range every time. So you have to know what you're getting into, but there's some strong growth in there. You can look at that, some really powerful growth seen for this company. So a lot to like about this name as well.
All right, Ed. Well, thank you so much for your insights today. And that wraps it up for this episode of Earnings Cheat Sheet. If you want even more market analysis, you can tune in to Stock Market Today with Alyssa Quorum. That goes live after the closing bell. And we'll see you right back here next week.